is our story for today. This is Greg for Teslafaninsight. Thanks for joining us. If this is your first time, welcome. Also wanted to thank our Patreon supporters. We greatly appreciate your support and makes a tremendous difference in our success and viability. I wanted to note to you guys that today we have a video from Tesla that was sent to the press. And as you'll notice that as we go along, it repeats several times. One of our viewers asked a question, what are they building in China in the rest of those buildings? And I wanted to encourage you to note that in general, you have pillars that support the roof, but the amount of space there lends itself for how the robots will interact with that roof, etc. So you can kind of use how this factory is structured to sort of extrapolate what you might be seeing when it comes to the build out in China. And we'll probably do some more close comparisons so you can view those. But this look inside the factory gives you a general sense of gaps between pillars supporting the roof, how larger pieces of equipment, particularly stamping equipment, fits in with that, and how the production line interacts with it. And so therefore it gives you a better feel for what's going on in China. This is Greg for Teslafaninsight. Thanks for joining us today. If this is your first time, welcome. If you're a repeat visitor, welcome back. Sort of made an error today. This is actually our trade blast for the day and wasn't meant to be a live show, but I think I'll just roll with it as is. What we typically do is today is Tuesday, so we typically have a show for the rest of the week. The shows that we do on Trade Blasts are typically only for Patreon supporters that go, between $50 and $1,000 for the month. And so I kind of made an error on the settings, so I think I'll just go ahead and do the show that I planned on doing. So the talk I wanted to do today for our Trade Blast is just the fact that we have an interesting situation right now, which is after Fremont closed yesterday, we expected the stock was going to get killed today, primarily because you obviously are producing fewer vehicles, maybe 30 or 40,000 vehicles will not be produced in the plant in the month of May. So because of that, we actually expected the stock price to be down between $50 and $80 today. In fact, it started off the day down $15 or $18 at 4 o'clock in the morning here Eastern, and it actually went positive over 800, 804, 805 today. And I was talking with one of my Trade Blast buddies, and I was telling him I'm expecting Tesla to be between 820 and maybe 840 today once it opens. So the question mark is why, how, etc. So what I wanted to review, and we've done this numerous times, is to sort of focus on the difference between trading a stock versus investing in it, and the fact that one of the challenges for dealing with Tesla is how it splits the gap between investing and trading. So there are endless numbers of examples I could use. Let me particularly focus on the fact that Tesla's stock price move from Friday to yesterday was a move from about $700 to $800 or $804. Let's call it a 10% move. It's actually more than that in a percentage basis. So if we sort of cycle through good investing, getting 10% on your money in 1 year, especially when bonds are paying 3%, would actually be pretty cool, a good investment, and people would be thrilled with a 10% year for a stock. Pretty much that's a day for Tesla. So what this then means is that, and this is why I've shared numerous times that I felt that Tesla really has a unique situation where it actually is you're sort of spreading the gap between trading and investing as you own this stock. So a couple of other things that happened yesterday I thought that were reflective of a trading process rather than an investing one is that particularly as Fremont situation was announced, I actually bought a put at 790. The reason I bought it was that I'd made some good money for the day. And my thought process was, look, if these guys decide in the morning to drop by $50 to $100, I at least get paid for some of it. So I really think when you're in more of a trading environment than an investing environment, if you're a long-term holder, that's fine because you don't have taxes show up if you do short-term ownership of shares. The big issue, though, is that do you want to leave all that money out there for it to be given back in some unexpected activity? So this is where we actually get the introduction of sort of hedging or using options as insurance against the rest of your portfolio. You don't have to sell the stock. You can simply buy a put or buy a few puts. Those puts will give you money back if the stock drops. And that's why we did our trade group, et cetera, especially for people who own large amounts of shares. I really think this is prudent. So we're actually, obviously, this is Tuesday, earnings are announced tomorrow, Wednesday after hours. And the question one of my trade group folks asked is, well, you paid a lot for that 790 put, are you gonna sell it? And the answer is, I'm protecting calls that I own at various prices and ranges away from when earnings are announced. And so I may adjust it to perhaps add some more because they'll be cheaper on Wednesday than they are today. But I plan on holding both calls and puts. The ratio probably is in the 4-to-1 zone, maybe 5-to-1, something like that, calls to puts. And the reason is that, as you all know, Tesla, as of Thursday morning, will either be at 900, 950, or it will be at 600, 550, something like that. And so by holding those puts, I'm able to stay in it, get an opportunity to see what earnings do in terms of potentially driving value and making a lot of money that way, A, or B, we have the other route of it gets slammed and one can make at least in my case, the way I'm structured, my goal is to get to break even, at least if it gets truly decimated by the post-earnings announcement. So I think the general consensus right now, based on where the stock price is, et cetera, is really that Tesla's going to do pretty good and sold. You're in a strong position in terms of basically 80%, 85% of what should be known about Tesla is a done deal right now. So if there is movement, it'll be, 10 to 50 points rather than, 50 to 200 points after earnings. And in general, this should be positive. We've had some upgrades, not too many downgrades, if you will. So in general, we're setting up, I think, for an excellent quarterly earnings report. The big question is, how in the world can you shut production down for a month and the stock be up? So this is the challenge, I believe, when one deals with Tesla. The issue that comes up is that you almost have to split your mind in two. So on the trading side, think about it. This morning, or basically the announcement came out yesterday, Tesla's stock price was gapping towards 804. The announcement came out from Tesla announcing that they were shutting down through the month of May. The stock systematically went from 804 to 777 or 775 over a subsequent hour and a half. And then starting this morning, we started at or around that number, and that number started coming back, 794 being the last number we saw. So basically what happened there was the traders, hedge funds were saying, let's get out now. And in a lot of cases, they have bots that simply sell off their holdings so that they can choose to buy back in or do whatever they're going to do, but they're not going to sit there and take a huge loss. So I kind of bring this up because you're basically in a situation where the trading thought process on the situation right now is get out, wait and see what happens, and then get back in if everything seems to be okay. That's the trading mindset. Now, from the investment mindset, which it's our belief that we're looking at what the large institutions are thinking about, is that, well, wait a second, stock price is down. They're ready to get back to work, but aren't able to. There are a lot of institutions right now that are in a stuck position, which is they have a lot of money coming in from investors that needs to be invested, but they also have a problem of they don't have as many destinations for that cash as they'd like. So as a result, it causes them to go and buy stuff that's still doing not fantastic, but doing okay in this marketplace. So once you've gone to the drug stock successfully as a way to get some current income, there are actually large funds that are devoted in big cap growth. You know, some of the terms that are used are something called big cap growth. So Tesla fits that metric. There's sort of technology growth, another perspective. So the way that large institutional managers, be it for pension funds or for individuals, handle business is they've got to come up with new screens of the way in which they're going to handle their business. And you have to come up with a new way to invest, typically in order to attract decent amounts of capital when you're competing with so many other funds. So the issue for Tesla is that when it comes to institutions, you could say, you know, if you could do a crosshairs and just indicate that there are at least 20 or 30 different types of funds that crisscross when it comes to Tesla. And it could be, you know, one of the biggest issues is look through the screen of, if you just want to have some fun, go through and type in companies with more than, let's say, a $30 billion market cap. They're growing. You know, you understand the product or service. You might even own one of their vehicles. You know, it has a technology aspect, which is one way that a lot of people have made money over time, is investing in technology. So Tesla starts to crisscross at all of these very, very specific crisscross points where institutional managers really like to be. And so I think this whole thing is totally mind-blowing for the stock price today, because I had a talk with a friend who's he advises large institutions on options, and we were talking about Tesla, and he's like, look, by any metric, when you use, you know, traditional metrics to evaluate what a company should be worth, Tesla is really not generating the numbers that validate its current stock price or it even going higher. And so you have to agree with him. The challenge, though, is there are other variables that are sneaking in there. For example, there are a lot of hedge funds that are short the stock. So as it starts moving up, there are people who have to start covering. So what you end up with is a very interesting collection of small and large items that result in the stock doing fine. And it's sitting in a position right now where, with the right catalyst in terms of the right both current numbers and forecast by Elon, you know, this thing ends up in the 900 range rather easily. So I'm fascinated by what's happening. I'd have to say that my bias is towards more of an investing bias, which is you sort of build a thesis on a company based on investing principles, and then you look at what are you going to do with it. And the other problem with evaluating Tesla from an investment standpoint is that a lot of the information we tend to get, be it battery day coming up or be it tomorrow, represents new bits of data that we can leverage to understand better what's going on. So there are going to be some big questions about what are they building in China, why, and how does that affect their production numbers. And so I'm actually of the mind right now that they started building those facilities. They actually started with a large portion of it in September of last year after they finished the original factory. So now those guys have had a good 10 months to go plus to go out and build more stuff, to sort of build out the footprint of the facilities and be able to produce from those facilities. So I think there's going to be some upside surprises about how many vehicles can be produced, the types of vehicles, the percentage of vehicle components that have to be sourced outside of the factory footprint, for example. This whole thing is kind of fun to watch also, because there's a mental battle that's been going on between Tesla and its business model versus traditional autos. And so, as you know, thus far, Tesla has been able to kind of win this battle. But one of the elements that just, you know, comes to mind that I think is fascinating is I really focus on GM because I know their numbers. GM is 25% vertically integrated, whereas you have Tesla running 70-ish, 75% vertically integrated. And with the Chinese factory, what they talked about was the facility being 100% vertically integrated on site. But they also talked about the fact that only 60, 70% of that would be Tesla itself. And then it has its supply partners, all of whom are going to be pretty much on site, as you can see, based on the side of facility that they're building. So this is all to say, wow, we really expected the stock to get slammed today. Based on how things are moving, there are a large number of people buying the dip on the stock. And it's our belief that, it could be other hedge funds, but it's more institutions that want to be in prior to earnings, because the hedge funds are not allowing the institutions to wait until right after earnings to sort of get involved. So we're seeing kind of a jump the gun phenomenon here. And I expect it to continue into earnings, and then the 3-day rule hits, and then we have that going afterwards. So sort of that's our assessment. Our trade blast on Tesla is that, yeah, the plant's closed, but there's a battle between people with a huge amount of cash, and we're seeing the result of that. I guess the last trade blast item that I wanted to add was something happened yesterday, kind of in our trading group, where I was listening to one of our largest traders, and he did not get in on the rally because he had certain price points that he wanted to buy at, and the stock moved too fast and blew past that. So about half, 3/4 of the way through the day, I asked him what he was going to do, and he said, look, I'm getting in, because one of the metrics he used was to look at the trade volume. If you look at the number of shares traded for the day, an hour and a half almost in, we're at half the trade day in an hour and a half. So it was very clear then that when you have volume slowing down, the stock tends to drop. But if you have volume going up, there isn't a lot of case for there to be a dramatic pullback during which you might be able to buy shares more cheaply. So I thought, that was a good lesson for me yesterday, because I typically, from a trading standpoint, wasn't watching the volume. I was more operating on fundamentals of different types. But I just thought that was a nice addition to the discussion of process on how one might trade something like Tesla as it's moving through numbers. So at any rate, some food for thought for the day relative to, well, why is the stock price up when they aren't going to be producing in May? So at any rate, those are our thoughts today for our trade blast / show. I'd expect it to be out there in this manner, but we're flowing with it. We typically will be back on with our private trade blast tomorrow, Wednesday, and then through the week as we go through earnings. I want to thank you for joining us today. Just a reminder, don't forget your 25 leg lifts, no more than fried foods, no more than once a week. Try to go to bed, wake up at the same time every day. Don't go to bed within 2 hours of eating, preferably 4, to let the food fully digest so you don't have acid reflux or cancer issues related. This is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Lehitrot, Hebrew, Choda, Hafez, Farsi, Hey Do, and Do widzenia, Zdravstvuyte in Russian, and Ni hao ma in Chinese. Thank you to all of you that made comments. We'll try to clip those and post them below. We'll see what happens. Good luck to all of you. I'm making some good money here in the trade zone. Have a great day, and bye for now.